Well, hello members. March 6th, we had another nice rally again. That's 3 weeks in a row now. Markets have made up probably anywhere from 7 to 10% on those losses they had to start the year. Still down 5% on the NASDAQ and the Russell, only 2.5% on the S&P and the Dow Jones. So in other words, another big week to the top side, even better than we expected, even though we thought it would move higher. We thought it would plateau. It did plateau on the on the NASDAQ and the NDX, but not on the other indexes. And thinking about it from the perspective of what happened, right, it was fairly positive, and you can't help but be a little bit positive about what we saw last week in terms of the way the markets acted. You know, our expectations were that it would waffle after it made those highs. The S&P would get up towards that retest regen zone. And they did hit resistance here on the Russell and the NASDAQ, on the NDX and NASDAQ, but the Russell actually just powered on all week long, almost 1% every day. Oil continues to be the biggest thing in this market. And I want to show you a chart here of West Texas Intermediate. You can see the climb off this bottom from 26 to 36, $10 on a 26 basis. We're talking about 35% on the move up, straight up move, right? And that kind of a move, even though it's a heck of a short squeeze, that kind of a move can continue. And you're right to the breakdown bar, right? This was the breakdown bar. So you're right to the top. So we may see some, serious resistance coming in right off the bat here. But I want to put this in context, right? I pull this thing back and look at it. I mean, this market has come from 70, you just keep going back. Right? The market has come down from 110 to 25. That's the kind of damage it was done. And when you look at it from this perspective, right, this thing's just bouncing. I mean, it's just a bounce. Yet it's a heck of a bounce. It feels like a heck of a bounce. And when you see these kinds of moves, right, everybody thinks the worst is in. Well, maybe not. Switching the view here to a weekly basis, you can see this bottom is the retest regen zone as this thing comes back up. And so if we draw that across there, right, that zone is going to start right here. Now on the break, on this bar, on the break, it did test it 3 times, so this is the second time back. So it's not going to be a high probability that it fails, but you've had a steep rise off the bottom. So you may see some resistance right there at that level. That's also on a weekly basis. That's the breakdown bar. So that's where you would expect oil to have some trouble. So we saw it there on the daily. We saw it here on the weekly. But if we're looking for positives, right, you actually have a pretty good positive in that way back here in 2009 when it crashed, right, this has come back to test it. It actually has lighter volume on the test. And you can see how far this can go back the other way if it wants to bounce, right? So there's nothing down here to prevent this from making, in this case, the 1, 2, 3, 4, 5, you don't have it here. So all you have is the test. I was looking for a retest regen on the monthly, but you don't have it except for way back up, right? This swing point low. And if I did the counts, we'd have 1, 2, 3, 4, 5, 6. So this would be the count on the way back up, so around $50. So we could still bounce another $14, or putting that into context from where we're at, you could still bounce another 10%, and just actually more than that, 15% or so, just to get back to the retest regen on the oil futures and on West Texas Intermediate on a monthly chart. So even though oil probably is going to hit some resistance on the monthly time frame, it's probably going to continue for some period. And if it does that, we should expect the Russell to outperform the NDX on a spread basis over the coming weeks to months. And that might be something to look at in terms of trading opportunities. This huge rally in the commodities, despite the stronger dollar, right? Because if this dollar was actually up off these lows as part of that oil rally when it began. So the dollar made the run along with oil, even though it pulled back 3 days there. It had a nice big spike up. You got the ECB this week. I expect the dollar is going to hang in this area at least for the time being until we see what the ECB is going to do on Thursday. The expectations are they're going to put more a QE out there. They're going to make more negative rates. But it was interesting that oil could make that kind of rally despite the stronger dollar. The breadth on the market, especially the beaten up stuff, much better, right? And it almost had to be. I mean, if you look across these sectors, you can see the kind of damage that's been done everywhere, and we'll look at those in a few seconds here. But that created better breadth. Better breadth gives the market time to recover to some extent. Now, if we switch to the more negatives, right? All that stuff was positive. What's the negatives? Well, that long-term chart of the oil that I just showed you, from 120 or so down to 25, that's a pretty big negative on the West Texas. The basic materials, just look at some of these. Even though the declines, in these sectors are nothing like you saw in the oil, I mean, still you went from 52 down to a low of around 36. So you dropped a good $16 off of 52. That's not a bad percentage in terms of a pullback. It's a bearish trend. If you're going to get a swing point high up here, then you could change it. But the long-term, monthly chart, it's pretty damaging here on this. The same thing on the energy sector, right? Where you went from, what is this? XLE went from a high of almost 100, well, 101 actually, down to 49. So you dropped a 50% move. Or any of the metals, like here's copper going from $60 to 22, 60-70% drop. And that's not just here. I mean, look at coal, look at any of those, mineral type metals, if you will, all the same thing. And actually, if you look at gold, gold had that test failure on Thursday, which I spoke about. That was on this bar, and got over the top, back underneath it, and then Friday looked like it was going to run higher. Actually did a 2-bar reversal on Friday, and this thing's going to try to come back in now. So, if gold is trying to come in, maybe that says these markets are going to be able to hang up here higher for longer, which may be the case, but certainly there's going to be some opportunities as these come back to do some trades in those areas. Continuing with the bad, I mean, it looks like emerging markets had a heck of a run, and they did, until you pull it back to the monthly and you see you're just coming back to do the retest regen, right? The bearish retest regen on a monthly time frame. I mean, that's how much damage has been done, right? In this case, from 44 down to 27. So you drop 17 off of 44, 30-something%. And we have this in almost all the overseas markets, and we have it in the debt markets. I mean, again, look at the move off the bottom. This is why it looks so dramatic. 75 to 81 in roughly 3 weeks. That's a pretty good percentage move on a debt until you look back at a monthly and you see this thing's dropped from 95 to 75. $20 off in a little over a year. These are pretty big declines. Yeah, they're doing saves right here at the bottom where they should. But, folks, as they bounce back up, these are just bear market type bounces. And I don't think we should be getting that excited about bear market bounces unless it really proves to be something else. And with that idea, let's look at our indexes. I mean, really, what is happening? In my estimation, it's just a big bounce, right? These bounces can look tremendous when you put it in the context of this long term. They don't look anything other than bounces. So to put this in context, let's look at the qualified trends, right? On the short-term time frame, we actually got the push, right? Everything's flipped around, gone to bullish, or it's either sideways or bullish, pretty much across the board. But look at what's still happening on the intermediate term time frame. And this is the weekly charts, right? You've only got a couple of these that are anything besides bearish. Everything else pretty much bearish. You've actually got the IWM and the NASDAQ, but for the most part, these haven't been able to turn. If we start to see improvement here, then maybe we're going to have to start to think that maybe somehow they're going to save this market after all. But more than likely, what we're going to see is we're going to see these probably hang where they are. We're going to see these come back because they're more volatile, come back over, roll over, go back to sideways, maybe even back to bearish. And then if that does happen, right, these are going to set up to try to stay where they're at and eventually get the breaks over here. That takes time. I would think that these won't break until we get out to, you know, as late as June, July, maybe even August, if they're going to break. And that the way these are going to set up is we're going to see some of these shift back to sideways like they're doing. And we're going to see that in lower highs on these markets. So let's specifically look at our charts, and I'll show you what I'm talking about there. So let's quickly go over what we have right now. We have a bearish retest regenerate, and we're on the daily time frame, right? And we're into that. Typically when you make a move that lasts more than 6 bars, and this is way more than 6 bars, when it comes back up, it's usually not going to make it to the other side. So the odds are not high that it's actually going to get to the top of this on the first move. And it's becoming stretched anyway, which makes it even less better, you know, the odds less prevalent that it will get there. So we probably should see some sort of an attempt to turn this. Now we had options expiration, so we got volume. If you look at the volume of the bar it was going into, it's pretty good, right? 66.8 there, you're doing 64.9 here. So not bad on the push. But look at it on the weekly. It has to make it all the way up to here to get a transition of trend. That would mean that you go from 1810 to 2085. Now that's a heck of a run, right? That's almost 300 points, you know, on the way up. And right now it's doing it in a straight line fashion. I doubt it's going to do that. I doubt we're going to make that move right up to the top and break that without some sort of a pause, some sort of a retest. And so, you know, if you think about it from that perspective and you go back to the daily chart, you know, how would that line up? Well, that retest would try to come back into this swing point high. And so the retest regen here would succeed in turning price back lower, get some sort of a pushback into this area, and then try to come back again. Now, if it takes a while before it does that, you know, and by a while I mean multiple weeks, then you could go back to this and you could say, oh, well, then this ends up being a swing point high. So we get a lower swing point high. Eventually you mess around down here, and then eventually you come back to test it, maybe get over it. Maybe you get as high as here, right? And then you fell and potentially come back down again. So that scenario, right, is going to take 6-8 weeks probably to play out. We're already, you know, first third of the month here on March. So if you just figure 2, that takes you out to May, almost to June. So, you know, this market could hang in here for another 2 or 3 months before it actually rolls again. Now that's one possible scenario, but I could see that scenario unfolding on these markets. If I look at the NASDAQ, right, the NASDAQ itself this week, remember it was extended on the intermediate term time frame. It got over its swing point high. And so that lower swing point high ideal I was just talking about with these other indexes would be the kind of scenario that I would think would play out. You know, you get a lower swing point high, you come back and you get over it. And so that's kind of what I think, you know, in terms of how the MTTFs will play into all this. We're going to probably drift now, maybe for 2-3 months before we get another significant move up or down. And my expectation is that this is probably still just a big bounce. And so if I look at it from that perspective, you know, my best case this week is that we get up and we actually take out those retest regen zones. I think that's the best you could think could possibly happen. And I think that's not the high runner case. So you get up here and you actually get over them and you take them out. Possible, probably not the most likely case. If I look on the downside, you know, what could happen on the downside? You know, there I think the worst case, it pushes us back down to retest that swing point high that was broken. And it doesn't hold. And so in this case, right, if I go back to the S&P 500 on the daily here, in this case you come back to do this retest regen and this doesn't hold and it actually breaks below it. I don't think that's the high runner case either. I think the high runner case is this turns it back, it comes back in to do a test, and then you find some support in that particular area this week. So that's the way it lines up this week in terms of the way I'm looking at it. I think that's probably the most likely case. The big news this week, ECB. Next week is the Fed. I think those are the things that are going to drive this market. Clearly, we've already gotten a bunch of the ECB enthusiasm pushing into these markets. You certainly can see it in markets around the world where all of a sudden the risk on is back out there. But if you go and look at, like, say, Germany, and we look at it here from a perspective of a daily chart, it's just trying to get back to the swing point high. And if you pull it back and look at it on a weekly, this thing has taken a huge hit since it made its highs last year, from 12, almost 12,400 down to 8,700. That's a big drop. And that percentage decline is not small, and that's true around the world. We've held up the best because our economics have looked the best. Is the rest of the world going to drag us down, or are we going to drag the rest of the world up? I suspect it's going to be the farmer. The rest of the world is going to drag us down before this is all over. That's it for this week. We'll keep our eyes peeled here and see if we can make those trades that we got on work. And, of course, we're going to look for padding to those a little bit. You know, I had both of the price points on that SH pegged completely, and both of them I didn't get filled on. And I'm sure most of you didn't either. And that makes it unfortunate when you're trying to get the best entry. Missed them both by just fractions of a penny. That's it for today. We'll have some more trades this week. As gold pulls back, we'll have a trade there. It's going to be a long slog here for probably a good 2 or 3 weeks, in my opinion, as these central banks do what they're going to do. Some volatility is going to come in, and we'll just try to use that to consistently add to our portfolios in terms of profits. See you next time. Good night.